How's it going, everybody? This is Richboywayne, aka the Specialist of Opportunity, and in today's video we're going to be talking about the wheel strategy. One of my favorite strategies, and honestly it's one of the ones that will give you the most consistent profits of all of these strategies that I've covered on this channel thus so far. So remember, if you like this content, go ahead and hit the like button, and if you want to hear future videos from me, go ahead and hit that subscribe button. But on to the video. Okay, so the wheel strategy is basically comprised of 4 phases. The first phase is buying a cash secured put. Basically, you're going to buy a put and the cash is going to be set aside and used as collateral. And you'll see that in a couple of minutes when I log into Robinhood, but just bear with me here. So you're going to buy a cash secured put. One or two things is going to happen. Either A, the stock is just not going to dip down to the price of the strike price of the put, and then in that case you just do it again. You just buy another put and you keep doing that until you get assigned. Then once you get assigned, you're going to get 100 shares of stock. Okay, so once you get 100 shares, then you're going to move on to phase 3 of the wheel strategy, which is selling covered calls, which I'm going to also demonstrate that in a couple of minutes. But you're going to sell these covered calls, and eventually what's going to happen is that the shares are going to get called away. And then once you do that, you take the proceeds from all of this and you just do it again, and you make money every step of the way, and you just do this over and over and over and over again, over and over and over and over. And so you kind of get the point. But allow me to show you what this looks like in Robinhood. Okay, so for this example, I went ahead and chose Cassava Sciences. Now, don't worry about what this company is or what it does. That has nothing to do with this video. That's another video for another day. But I'm just using this as an example. So we're going to come down to where it says Trade Cassava Options. If you do not see this, you do not have options enabled on your account. Go to Account, go to Settings, and Enable Options. Request actually level 3 options. And I'll be making a video soon on how to do this, but for now, just bear with me. So if you don't see that, just you don't have that enabled on your account, that's all. So you want to go ahead and click on Options here, and as you can see, Cassava is trading at $62.14. So what we're going to do is we're going to sell put, and we're going to sell this put option. We're probably going to go with the 62 because obviously that's the one you want to go to. We'll just select that one. And once we have that there, what we're going to do is we're going to go ahead and hit, well actually, yeah, okay. So we're going to get a credit of $4.55. $4.55 times 100 is $455. So hit continue, and then we're going to get this immediately to our account. Now, it's going to require that we purchase 100 shares of this stock, which, if you do the math, comes out to be about $6,200. Now, don't worry about that. You obviously choose whatever stock is affordable to you. That's in your price range. But this is just for an example here. And of course, it's going to make us do update to 450. That's fine. View. And of course, I don't have enough collateral in my account. But if I did, I would hit continue. And there we go. Allow me to give another example here. Let me do SOS. This one's a little cheaper. The premiums aren't as high, but most of you probably have $200, that you can do this with, if you just want to experiment and try this out. So here we go. Go to sell, put. We would obviously buy this one. Then we would make this little $5 here. Review, and then we hit submit, and we would get this $5 to our account immediately. And then what would happen is that by October 1st, if the stock price is above $2, we get to keep this. And this is, if it's below, then we would have to go ahead and purchase the shares of stock here. But as you can see, that's pretty much how you would do it. Now, once you get, let me go back to the whiteboard here. Have it in a second. Once you buy the security put and the stock price drops down, you would then get assigned 100 shares of this stock. So you would get assigned 100 shares of SOS. You would then turn around and I'll have to cancel that. But what you would do is you turn around with your 100 shares. You would go to sell and you would go to call, and then you would sell the call. And let's say, for the sake of argument, you got it signed at $2. You would then sell your call at $2.50. So there you go. Then once that happens, your shares get called away. This money goes into your account balance, which is this right here, and then you just do it over and over and over and over and over and over again. So step 1, you want to go buy the cash security put. Step 2, you get assigned. Step 3, you sell the covered call on the stock. Shares get called away. Then you rinse and repeat. Kind of cool, huh? Now allow me to show you some of the risk of doing this strategy. Okay, so here's some of the risk that is involved in doing this strategy. The number one risk that I hear constantly is, I did the wheel strategy and the stock dropped after I got assigned shares, which sucks. But it is a thing that does happen. It is something to be aware of. I mean, the same thing could happen if you buy 100 shares of stocks, or if you buy, a call option, put option, whatever. That can happen to anybody at any time. But it is something to be aware of. So you obviously want to study the charts, make sure you're doing your due diligence, make sure you're buying stocks that are trading probably above the 50-day moving average, and you shouldn't have to really worry about that if you're buying good companies. That's why we recommend doing this on solid stocks, i.e. not meme stocks. Not for this strategy, at least. There are strategies that I would recommend for meme stocks, but this isn't that strategy. We recommend companies like Starbucks, Apple, Microsoft, etc. And people often assume that you want to buy companies that are like this or this, but you really want to buy things that are going sideways. Let me show you what that looks like. So we come over here, and let's say, for example, we would choose AT&T, the most sideways stock you could ever buy, ever. Look at the 1-year chart. It's kind of like, look at the 1 month chart. This is what it looks like. It's real choppy. This is kind of something that we would probably use on this strategy. Another good one is Apple. Let's take a look at Apple. Let me do this again. Here we go. Apple, pretty much the same thing. Going up, it's real choppy. Probably more so AT&T, because I'm gonna show you why. If you look at the options prices, the more volatile a stock is, the more your options are going to be worth, and you're gonna get more bang for your buck. But again, you want to use this on good companies that have good fundamentals. Does AT&T have good fundamentals? It's questionable. So here we go. We want to use this for stocks that have dividends, obviously, because we're going to be owning these stocks. Why not get dividends? I mean, it's kind of a no-brainer, If we're going to own 100 shares of stocks, we might as well use ones that have dividends, and we might as well use ones that are not that are cyclical, meaning that they have a pattern of going up and down, similar to what I just showed you guys right here. Look at the 1 month chart. You can kind of see this is real choppy, and hey, you kind of see where I'm going with this. So I hope this video helps. Hope it makes sense. If it does, go ahead and leave a comment in the comment section. I'll make sure to get back. If you have any questions, actually, go ahead and just leave a comment in the video, and I'll get back with you. And if you have any suggestions as well, go ahead and leave a comment. If you think this is a great strategy, go ahead and hit the like button on this video. Go ahead and subscribe to my YouTube channel, because I'm trying to blow up. And I mean, it's hard out here. You know, when you're a small YouTuber, it's hard. The struggle is real. But as always, stay up, stay positive, and I'll see you guys in the next video. Alright.
This song is dedicated to all my AMC, GMC holders, all my people who bought in Tesla when it first came out. This song is dedicated to you.